Welcome back. Salesforce has just reported its first quarter earnings. Let's take a look at where they landed. Their adjusted earnings per share coming in at $2.58. It was $2.44 in the same quarter last year. And the estimate had been for $2.55, so a beat of 3 cents for Salesforce there. First quarter revenue coming in at $9.83 billion. That's up 7.6% year over year. The estimate had been for $9.75 billion. So again, a good beat for Salesforce there. And the forecast for Salesforce, they boosted revenue guidance for the full year. They see forward-looking revenue at $41 billion to $41.3 billion. They saw 40.5 to 40.9 previously. All right, let's bring in Rishi Jaluria. He's managing director for software at RBC Capital Markets, and he joins us to go through some of the numbers now. Rishi, thanks for joining us today.
Thanks so much for having me.
So they missed revenue expectation last quarter. They beat it this time. What's just your headline read of what you've seen so far?
Yeah, look, I think the big headline read for me is really twofold. Number one is things are better than feared. We've obviously had a lot of concerns around the macro environment with everything related to tariffs and trade wars and obviously cloud optimization. And the worry was, numbers were going to kind of decelerate. Look, they had a slight beat. They beat on CRPO, which is the most important metric that we're looking on a quarterly basis. The guide seems, pretty decent. And at the same time, they gave some metrics in the press release around some of the momentum that they're having with Agentforce. I think they said about 8,000 deals that they closed since launching Agentforce, half of those actually being paid deals. So things kind of seem, again, I would say pointing in a more resilient direction, and especially off the backs of the Informatica deal, which formally got announced yesterday. Maybe there were some investor fears that they were buying to cover up slowing growth, but that doesn't yet seem to be the case.
Okay, talk to me about their Agentforce software, their technology. Has that been sort of leading their revenue here?
So it's not, right? It's a lot of marketing behind it. It's a new product, right? But especially because this is a brand new technological wave, it's going to take a lot of time to reach substantial revenue. So they have given some stats around, data cloud revenue, AI revenue. I think that's close to about $1 billion in ARR today, which, for a company that's 37 billion in ARR, it's only a small portion of it. But the hope is that grows kind of over time, gets to double digits, and maybe more importantly, helps them competitively, helps them with retention rates, helps drive expansions within the existing customer base, maybe drags along multiple other products. So overall, the idea is that Agentforce, as it continues to build momentum, can just drive a better growth outlook and better growth algorithm.
Okay, you mentioned the concern, of course, about tariffs and the knockoff effect on people not spending as much. I'm wondering whether in the numbers or commentary they did sort of allude to any hit by tariffs.
I haven't seen that yet. I mean, we'll see what they happen to say on the actual live call in about 40 minutes. But generally, I would say, in this case, right, like there's no direct impact. You can't actually tariff software as a service. But I think it's more uncertainty is bad. And anytime there's uncertainty, that puts pressure on budgets, that creates deal scrutiny, longer sales cycles, basically the same stuff we've been dealing in software over the past couple of years. And so, we'll see what their commentary says around that. But I think the thing that seems to be clear here is it's not hitting them quite as bad as I think people would have feared.
Okay, so obviously they're not going to be directly hit by the tariffs, as you mentioned, but the fear is that they would have the knockoff effects. Are you concerned about that later in the year coming around for them?
I am, and this is not just Salesforce, I think broadly in software. I am worried that some of the impacts will show up maybe a little bit later in the year. You probably had some level of pull forward. I'm starting to hear in my own checks that there is more deal scrutiny happening. So maybe in this quarter, it kind of balanced out, and we're not seeing it yet in deal pipelines and close rates. But uncertainty is always going to be the enemy. And the longer that this goes on, the longer that we just don't know how this is all going to shake out. I mean, there was more news this morning related to the U.S.-China. I think just uncertainty is going to be something that leads to just a little bit weaker growth algorithm. That's my worry, is maybe we're just kind of kicking the can down the road for 90 days.
Okay, Rishi, you mentioned the Informatica deal, which is an $8 billion deal. It's a very big deal. I'm wondering how people have been reacting to that and whether you think it's a good fit for this company.
Yeah, look, based on my conversations, investor sentiment on the Informatica deal has been pretty mixed. On one hand, you can say, look, now they own the data layer, and you have Informatica and MuleSoft and Data Cloud that all powers Agentforce and the rest of the Salesforce ecosystem. That's, I think, the kind of bullish commentary around it. And you can say, look, they're buying it a lot cheaper than a year ago when they were looking at Informatica. I'm maybe a little bit more on the skeptical side, right? I question, why do they need to own Informatica versus having deeper partnerships with them? Salesforce's recent track record on acquisitions candidly has been a little bit more mixed, and that's not an unpopular opinion to say, controversial with Slack and Tableau. We'll see, jury's still out. Let's see how those all play out. But I think that's the thing. And does this become a bit of a distraction at the same time that, Salesforce has its hands full, on the margin story, on Agentforce? I think there's just too many open-ended questions. I would love to be proven wrong. It would be great to see this work out well. I mean, Salesforce is my hometown company, being from San Francisco, but I just think there's too many questions right now for me to, support this deal.
Okay, we're just having a look at the market. Right now, it's at 276.03, so it's down $1.16 at this point as that news comes out. I also wanted to mention that an Evercore ISS analyst, Kirk Materne, reiterated a buy rating and puts the stock at $350. I'm just wondering what your take is on that.
Yeah, on another person's rating, I necessarily can't comment, but I'll say this: look, the stock is still trading at a pretty cheap valuation, right? I mean, this is a leader in the industry. They're a market share leader. There are a lot of different avenues they're going down on. I think the roadmap that they paint with Agentforce is interesting, right? It's definitely intriguing. We'll see how the technology actually plays out. They just did a recent release on Agentforce, so I think there's a lot of promise here. And for a company that's trading at maybe a high teens or 20 times free cash flow multiple with a lot of margin expansion and probably a decent runway of growth, that's not a very demanding multiple.
Okay. Rishi, I do have to leave the conversation with you there. Rishi Jaluria is a managing director for software at RBC Capital Markets. Thank you very much for your time. Appreciate that. Coming up next, chipmaker NVIDIA set to report its latest results. We'll dig into those when we come back.